Welcome to the Tesla Economist. Please hit the thumbs up and don't forget to subscribe. I just wanted to discuss where I see things are with Tesla at the moment. As expected, Plaid delivery day had minimal effect on the stock price. Actually, I don't think it went down for once, unlike how most Tesla events tend to unfold. And the stock price seems to be out of the 500s, which gives us a bit more breathing room. These slight adjustments aren't overly important. These small events have minimal overall impact on the stock price. For the stock price to move, then Tesla need to really prove that they're capable of delivering some of their promises. But it's manufacturing. It takes time. You can only make cars so fast. It's not like trying to get people to sign up to Facebook. The process is much slower. But no, we need an event that really makes an impact to that stock price and takes it to its next cycle, where it might trade between $1,500 and $2,000 stock price. Well, everyone is hoping for FSD, and we now even have an AI day where we might get some more information on FSD, not to mention new releases expected very soon. But what if Tesla suddenly announced FSD is now complete? What does that even mean? It's already better than a human now, if you measure it by fewer accidents. How much safer does it have to become to be considered level 5? My point is, I don't think Tesla announcing that FSD is now level 5 feature complete will have a major impact on stock price. I think it just goes over people's heads too much. Then there'll be all the regulation to get through. This might take some time too. In other words, I'm not sure it's going to be FSD that gets the stock moving anytime soon. And I know there are some people who expect robotaxis even next year. I can't really see that happening this first half of the decade at least. Whilst I don't want to dismiss the entire idea, I don't want to bet on that occurring with my investment. In other words, I don't add too much value onto Tesla's stock price for robotaxis. It's more like a lottery ticket. For all of you wondering, when will the stock price recover, or go up, or move again? Well, there isn't anything on the near horizon really. It could be quite a flat year. Q2 will likely be another record quarter, which is amazing, possibly up 20% from Q1, which is a big jump. And if it's good earnings, then maybe we might be seeing 700 again. But we're still floating around the same price brackets. It won't send the stock to the moon. We want to move into the next cycle where we can feel really happy because the stock price has doubled again. That's what really matters. All this 10% up and down stuff is just noise. What are the next events that will make the stock take off again? Now, supposedly we should get a Model 2 reveal at the end of the year. I have a feeling that this will be delayed, possibly the entire Model 2 project altogether. But even if it was unveiled, I still don't think it would be a major factor on the stock price. If they did, however, announce the factory and start building the Model 2 factory, then that will no doubt display a bit more conviction and confidence into the Model 2 project, which would likely move the stock up a bit for a while. But it's not going to really send it to the next level. Either way, I don't think Model 2 will be the catalyst we are looking for, at least not until once Model 2s are coming off the production line. That will definitely give the stock a boost. But it's likely we will encounter events before then that allow the stock price to enter its next cycle. Events more like if Tesla can demonstrate that they can scale Texas and Berlin and reach a capacity of around perhaps 50,000 units a quarter for each by Q2 next year, then that should be a good enough indication that these new factories should be capable of reaching a run rate of over 1 million units a year before the end of the year. That would take Tesla to a run rate of around 2 million units a year by the end of the year, or for ease of understanding, let's say 500,000 units in Q4 2022. Also, remember the majority of these units are now Model Y, and most of them are using 4680s and structural packs, with die castings. So the profit margins will be much higher, along with the new S and X back with even higher margins. Once these numbers start getting out and more projections are done for more ramping up, then it becomes easier to project Tesla's future and thus assign a higher stock price. As important as these two factories are, they're also going to be the proof of the 4680 batteries. We're going to witness just how fast Tesla can ramp up their 4680 battery production with these two facilities and their own purpose-built 4680 factories. This really is the most important part of the company in my opinion. It sounds like Tesla is starting with 50 gigawatt hours a year of batteries in Berlin. I believe that the new Model Ys will be much lighter weight than the existing. And what would make more sense? To increase range and performance, or reduce the required batteries and increase margin? I would say most likely the latter. For Germany and Texas Model Ys, the range and performance will likely be similar to Fremont and Shanghai, but there will be a weight difference due to all the manufacturing advancements like casting molds and structural batteries. What I'm saying is that I think the long-range Model Ys might be fine with just 70 kilowatt-hour batteries from Berlin and Texas, compared to 82 kilowatt-hours from Fremont and Shanghai, which means Tesla could get about 715,000 Model Ys a year from Germany at 50 gigawatt-hours a year. We've heard that Tesla have plans to increase that to 250 gigawatt-hours a year of battery production. Elon said, "I think it will possibly be the largest battery cell plant in the world. I think it will be the largest. It will be capable of over 100 gigawatt-hours per year, and possibly over time it will be going over 200 to 250 gigawatt-hours. I'm pretty confident that at that point it will be the largest battery cell plant in the world." FYI, at 250 gigawatt-hours a year, we're likely talking overcapacity of 3.5 million Model Ys. But that battery factory would obviously be used for other vehicles, with enough capacity to cater to a Model 2 factory possibly. This is why we must be patient right now. Sometimes in investing, you have to sit and wait. There's nothing else to do. Right now, the company really is relying on the progress of these two factories. But just look at them. Tesla are not messing around. They're already accumulating casting molds for future vehicles. No time is being wasted. They're even testing out the new Berlin paint shop already too. This does not look like a company that are messing around. Every minute of the day is being utilized in order to get these cars off the line as soon and as quick as possible. They're not acting like a company that can't achieve their missions. They're behaving more motivated than I can imagine. They can't wait to get cars rolling off these lines. Compare this with a company like Nikola that couldn't even break ground on building their own factory. Everything Tesla is doing looks like it's on the right path to their mission that they have set out for themselves. Even if for some reason these factories or 4680s get delayed a further 6 months, yes, it would hurt the stock price, but as long as it eventually came to fruition, it would be fine in the long run. The fact Tesla can achieve this eventually is enough in reality, and it's such an accomplishment. I know I talk about 4680s a lot, but any evidence of their progression means a lot of us make a fortune. We will likely see the progress we're looking for on these factories and 4680 batteries sometime next year, maybe around Q2, as long as we have enough information to roughly calculate the capacity of Berlin and Texas, and then how long it will take Tesla to reach it. For example, if they each had a capacity of 1 million units a year, and Tesla reached a capacity by the end of next year, then by that stage, Tesla will be over 3 million a year run rate. The other major event that can take Tesla's stock price to a new cycle is the EV tax credit. If it means Tesla can get perhaps over 50% more gross profit for every vehicle sold in the US, their largest market, then they might open more factories in the US and take advantage of these incredibly high profit margins. Eventually, the numbers will come in and suddenly Tesla's stock price will react. It won't be difficult math to work out how much more profit Tesla will make with twice the factory capacity. Although the gross profit may be up 50%, it would likely mean net profits are up close to 300 to 400%. The earnings per share figure that Wall Street cares about so much, if the market sees Tesla with EPS up that much, then it will react and the stock price should enter another cycle. It sounds like Tesla will have all these tax credits to themselves for some time, as GM and Ford don't sound like they're targeting 1 million annual sales by 2025. Tesla could just keep making tons and tons of Model Ys. They could get to 5 million in the US, and the cost may eventually be down to $30,000 with the tax credit for the consumer. So many consumers will want one. That would be exceptional value. It may end up being some mid-range version perhaps, to reach the price point with 300 miles of range, but my point is, Tesla can certainly keep the demand up in the States with the tax credit. Every car will sell. It likely won't take too long for investors to work out how much more profit Tesla are achieving with tax credits, particularly from the Texas facility. Then, with the announcement of another factory in Texas or Northeast US, then it should give the stock price a serious boost. If Tesla was selling 1 million cars in the US, and the tax credit generated an extra $5,000 profit, then that's $5 billion extra earnings every year before tax. I would have thought these numbers would take the stock price to the high teens, around $1,500 to $1,800 stock price. Of course, don't forget these two events are not mutually exclusive. They can both occur together, which would mean there's a high possibility we're well over $2,000 stock price at that stage. Anyway, patience is part of the game of investing. But it sounds like Tesla are working hard for all of us and not idly sitting by watching this unfold. But next year, we'll hopefully take Tesla to the next level. So hang in there as usual and don't get too bothered about the daily price fluctuations. As long as these events are still on the cards, ignore any FUD in the meantime. Thanks for listening. Please hit the thumbs up and don't forget to subscribe.